Experts were baffled when trade data from India and China showed a mismatch of $12 billion. China said its trade with India touched $103 billion in the first 9 months of 2022. But India said that its bilateral trade with the Asian giant stood at $91 billion. Yes, you heard that right. $12 billion unaccounted. Data from China's General Administration of Customs showed that the country's exports to India stood at $89.99 billion till September. According to India's figure, the imports from China were worth $79.16 billion. This shows a gap of over $10 billion. Similarly, a gap of $2 billion was noted in the data on exports from India. India's data showed exports to China worth $12 billion, while China's corresponding data showed a figure of $13.97 billion. According to a financial daily, China pegged the trade deficit between the two countries at $75.67 billion. India says it was $67.17 billion, bringing the difference to over $8 billion. Experts point out that in bilateral trade, the export numbers for one country hardly ever match. Biswajit Dhar, economics professor at the Jawaharlal Nehru University, Delhi, explains.
These trade figures reported from the two countries which are trading can never match. The simple reason is that when exports are usually done on the face value of the products. So whatever is the value of the product or products that are being exported, which are reported to the customs by the companies concerned, that is the value of exports. Now, trade, other costs, and insurance, all these are included in the value, in the import value. So exports are what we call the free on board, just the free face value, and imports are CIF value. So there will be a discrepancy.
However, the FOB-CIF discrepancies cannot account for the kind of discrepancies that have surfaced in the recent trade data. Experts say that this gap is caused by systemic corruption, primarily the act of under-invoicing of shipments.
Traders on both sides, they are actually not reporting the true value of the imported and exported products. And this is what we call under invoicing, or they can report less or they can report more. Yeah, and that all depends on how they want to sort of siphon off funds from the country.
However, Dr. Jayant Dasgupta, former Indian ambassador to the WTO, thinks that while under-invoicing can surely be a factor, it might not be enough to account for such a huge difference. Instead, he points to yet another possibility.
Import data is collected on the basis of entry into Indian ports, whereas the export data is collected on the basis of exports, that is the products leaving the shores of China, for instance, in the case of China-India. So there would be some time gap. If you assume that the average time taken is about 3 weeks for shipments to leave China and arrive in India and get reflected in the customs import data, then the Chinese data would be of a slightly earlier period.
Whether it be a gap in calculating the imports and export data or systemic malpractice, what kind of regulatory measures can be taken to put a check on these? Dhar says the G20 should take initiative.
The G20 should become more proactive on this. And I think, again, this is a message for the government of India. It's going to be taking the presidency of G20 very soon. I think this is an important, it should be an important item on the agenda of an Indian presidency. They should take it up and then try and convince all the participants that this is an issue that needs to be sort of given more attention, and whatever is being done already, efforts will have to be, sort of much more efforts have to be. Let me put it this way: much more efforts have to be put in order to address this problem.
Dasgupta disagrees, though.
I think this is not the domain of G20, because this is something which is really dealt with by the World Customs Organizations, about procedures, about how things can be streamlined and data captured in a complete manner. So it is upon the customs authorities of the two sides to sit together and find out where lies the difference in the data, and then try to reduce the difference, and then completely eliminate it at some point of time in future.
Perhaps a more digital response can work. Let us listen to Dasgupta.
I think moving to a system of complete automation, that is, data is captured correctly online, and there is also a reconciliation. Suppose I get a let export order from the customs authorities in India for 100 pieces, and I actually export only about 95 or 90 pieces. Then it should get reconciled at some, because exports don't attract any revenue collection, but that could be captured.
Either way, a permanent solution to such a bilateral trade issue is needed so that data disparity does not arise in the future.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.